Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on PCLN, NVDA, Tesla, NFLX, and CMG on the daily weekly time frame. So PCLN bulls didn't see a ton of follow through, and they have been fairly weak the last 2 days, but compared to the tech sector, they're holding up just fine. And the tech sector had a sell-off on Thursday. The bulls bought the dip and saw a little bit of follow-through on Friday, but then closed near the low of the day on Friday. So PCLN bulls are in line with the tech sector. We've been noting a correlation with the tech sector and PCLN over the last couple of months. Definitely something to be keeping an eye on. So our support level is 1923, and we've got resistance of 1947 and 1961 to be watching in the short term. Bulls are still in control as long as that 1923 level holds. The weekly time frame, indecision doji, not really at the top of an uptrend. You could call this an uptrend over the past 2 months, but I'm going to need to see a break of 1923 to be looking for the bears to take over in the short term. NVDA, new all-time high, right under 200 psychological. We closed weak down at the low of the day, but the bulls continued to buy this sector, and we saw a significant $8, or make that a $7 move from the low of Thursday to the high of Friday. So our new support is 192.45 for the bulls to hold a higher low daily pattern, and that all-time high is 199.59. Weekly chart still above the upper Bollinger Band in breakout mode the last 2 weeks in a row, and looking to see if we can get over that 200 psychological resistance level. We do have some sector earnings coming up this week. AMD has earnings, and that will likely see an impact on MU and NVDA. Tesla on the daily time frame with a bear break. It has clearly not been correlating to the market overall recently, and we closed down at the low of the day on Friday. So we broke the higher low pattern by breaking 2 support levels. We're now looking down at 340.267 and 331.28 with that close down near the low. We're on the verge of a bearish MACD cross, and the weekly time frame is back under the middle Bollinger Band, which the bulls had just regained after recently losing it. So bear break of a lot of support levels, and if we see the market begin to consolidate, that would see some likely favorable momentum for the bears of Tesla, but it's now up to the bulls to prove themselves to turn things around because the bears clearly have control. NFLX on the daily, no confirmation of the bullish reversal hammer from Friday or from Thursday. Thursday closed very strong. Friday was weak, closing at the low of the day. So that must hold support is 191.16, and a new resistance is 196.38. Weekly time frame, bearish candlestick rejecting from the upper Bollinger Band the past 2 weeks in a row. We have not confirmed them, but a potential volume climax here with the highest volume we've seen in about 3 months on NFLX weekly. So that would favor the potential for some further pullback from here, as volume climaxes often signal the top of an uptrend. We had a volume climax in October led by 3 weeks of consolidation, volume climax in July that led to 5 weeks of consolidation. So something to just keep an eye on. CMG, bulls closing up near the high. 326 is a clear resistance, followed by 329.71. Support is 319.25 and 315.52. We have earnings this week. Not going to see a whole lot of price volatility, in my opinion, heading into earnings. The bulls can hope for a move up to 300. The bears would like a move down to 315. But earnings are going to dictate whether we are ready for another leg down. Looking at the weekly chart, it's either going to confirm this is a bear flag with another leg down towards 300, or it's going to be a bull break in reaction to earnings and send us into the mid 300s. So it's a pretty important earnings reaction here for CMG because we are building this base of support for months, and it could be all erased depending on what that reaction is. So that's what we've got heading into this coming week. We also have tech sector earnings. We got Twitter, Google, and Amazon to be watching for the sector as a whole. I appreciate you watching, and we'll see you on Monday.